In today's real-life example, I'm going to be talking about a hockey player that is a client of ours. It came through mlenow.ca looking to refinance a property that he owns. And as it turns out, he has a first mortgage on the property and a second mortgage on the property. And the reason that he has a first and a second is because years ago when he bought the property, his credit wasn't excellent. He had some blemishes, if you will, in kind of his financial standing. So the only way he could purchase this property that he wanted to purchase was to do a first mortgage with a trust company and then a second mortgage with a private lender. Well, life's kind of worked out for him. He's made a bunch of money and things are okay. And now what he's looking to do is to see if he can't maybe refinance the property, pay out the first mortgage, pay out the second mortgage, save himself some interest, reduce his monthly payment. And as we started working through the file, we saw that, well, sorry, you're not going to be able to pay out that first mortgage. The particular trust company, it was a mortgage broker arranged mortgage, and so the trust company that ended up funding this mortgage has a clause in their mortgage agreement that says you cannot repay this mortgage unless you have sold the property. Can't repay this mortgage. You can give us any song and dance you want, you can give us any story you want, and it can be really sad, but it doesn't change anything. We lent you the money, you've got to keep it for the term that you agreed to keep it, and in this case it's a 5-year term. So what does that mean? Well, it means this guy either has to sell the property to somebody else and then maybe purchase it back, or he just simply is going to be stuck with a first mortgage and a second mortgage until such time as the term comes up, and then at that time he can refinance or renew the mortgage, or probably won't want to renew it. He's going to refinance it and kind of pay everything out. Now you'd be surprised to hear that we hear about this all the time. In fact, several times a month we will get phone calls or people will come through mlenow.ca with a request for a mortgage, and the bank would have said to them, look, you can't repay us, so they're going to the market to see if maybe there's some other options, and there really isn't. I mean, it is legal. A bank can force you to keep their money until such time as the term is up or other conditions have been met. So in this particular case, much like the other cases that we see, it's important to know if you're in a position where maybe your credit's not great and you've got to go to a bank or a lender that is going to approve you, make sure that you stop for a minute and say, but am I going to be able to refinance this? Am I going to be able to do something different with this property in the future if my situation changes? We had an example a few months ago of a construction mortgage on a property here in town, and somebody bought a property. They used a different company, a different trust company, to close on it, and their intention was to take down the property and build a new property on it. And so when the time came to put their construction mortgage together, they came through mlenow.ca to see what their options were, and sure enough, they didn't have any. The property was encumbered or had a mortgage on it from a bank that does not allow the mortgage to be repaid unless the property is sold. And so in that particular case, the individual did end up selling the property to a friend of his, who ended up tearing down the house and building up a new one, and so they were able to make it work. But the point was, I think it was about 3 weeks of the borrower going, well, what am I supposed to do now? I mean, I bought this property, I was doing this transaction, the person that was helping me at the time, how come they didn't tell me? And so it caused a lot of angst. But we see it all the time, and so much like this particular hockey player who couldn't pay out his mortgage, his financial situation had gotten much better, but the bank really didn't care. It was written right into their agreement that the mortgage could not be repaid. You too should do your homework and make sure that you're very much aware of what options you have. This particular hockey player, he can't access the equity in his property. So overall what happens is he just ends up seeing his income go out the door to interest. And if he would have had someone helping him at the beginning who knew what they were doing, he probably would have been able to get a more flexible mortgage that would have allowed for a refinance, would have allowed him to repay a second mortgage and a first mortgage with a brand new first mortgage at a lower interest rate. But instead, he's got to just keep paying the bill until the term is up, and that basically is lost money. The interest that he's paying on that is lost money, which is too bad. So don't let that happen to you.